The Blockstream app is your gateway to financial freedom on Bitcoin. Built by the team behind more than a decade of Bitcoin innovation, it's the easiest way to buy, secure, and manage your Bitcoin. Download the Blockstream app and start stacking straight to self-custody today. The future of finance runs on Bitcoin.
Welcome back to Bitcoin Capital. Today we're speaking with Matt Hougan, CIO at Bitwise Asset Management, one of the world's largest providers of cryptocurrency index funds, managing more than 15 billion in assets. Outside of digital assets, Matt has extensive experience in the ETF industry and is also a co-author of 2 CFA Institute Research Foundation publications covering Bitcoin, ETFs, and crypto for professional investors. Matt, welcome to the show.
Thanks for having me. I'm excited to be here.
Great. So to start things off, maybe we can talk about what Bitwise does and what was your personal path to Bitcoin?
Oh, amazing. Yeah, Bitwise is a specialist crypto asset manager. We've been in the market since 2017, so 8 years now. We run exchange traded funds, SMAs, and other products for financial institutions, family offices, financial advisors, and individuals. Today, we manage about $15 billion in client assets across the US and Europe. And my role there is Chief Investment Officer. So I look after our passive strategies and oversee the research team. My journey to crypto started on the day that Bitcoin crossed $1, believe it or not. I wasn't fortunate enough to buy Bitcoin at that time. But I was running a company called ETF.com. And this was in the early days of ETFs when actually people were very skeptical of them. I know they're well accepted today. But I had a team of young analysts, and each week they would run a meeting on something interesting in the market. And we had one analyst who was interested in Bitcoin. And so he did an hour-long meeting about what Bitcoin was way back in 2011 when we crossed $1 for the first time. And I followed it on and off since then. And when I ended up selling ETF.com, it became the thing I wanted to do next. The reason for that actually ties to ETFs, which is, as I mentioned, in the early days of ETFs, people were very skeptical of them. The press called them weapons of mass destruction. There were congressional hearings, believe it or not, about ETFs destroying the American dream. Today, they're, the apple pie of investing. Everyone loves them. But I saw this technology that people were skeptical of, but I saw as better, faster, cheaper, eventually win in the market. And I saw what that could do for growth. And you looked at crypto, it was the same thing. You saw this ridiculous FUD in the market. You saw congressional hearings. You saw people skeptical. But if you understood what was going on, it was better, faster, cheaper. It was creating a better financial ecosystem. And that was just a huge amount of alpha. So, going back, of course, I wish I had bought it at $1, but still that meeting is like a seminal moment in my history because of what eventually led me into Bitwise and into crypto.
That's funny. I spoke to Eric Balkunis in El Salvador last year in January or February, and he mentioned the same thing. He described kind of, we were talking about security tokenization at the time, and he described kind of us as the pirate ship, and that's what it felt like back then. So that's really interesting. And, of course, Bitcoin is, rat poison squared. So you get a lot of the similar criticisms from kind of the incumbents.
It's totally true. Vanguard didn't want to do ETFs. Now they don't want to do crypto. It does feel sometimes like I'm watching the same movie, but I think it speaks to something, which is, look, many people are afraid of change. They're optimists who look at new technologies and see opportunity. And then they're pessimists who look at new technologies and see risk. And in the early days of an innovation, the pessimists actually have more data points, right? Like if you look at the early days of crypto, there was really bad stuff, right? There were Mt. Gox and there was Silk Road, and there's a lot bad you can point to. But it takes that optimistic view to see what it could become. But over time, the optimists tend to be right. They were right on ETFs. They're being proven right on crypto. And I think that's the side that I like to align with.
So what is it about your personality that you think you've kind of been in this situation twice in a row, which is kind of unique, right? So lightning kind of hitting you twice. What is it about your personality? Do you think that you're, I kind of, my wife and my father described me as a natural contrarian. And I think a lot of Bitcoiners kind of rebel against any sort of authority or, the early kind of libertarian cypherpunk kind of attitude. do you have that streak in you? Is that what's led you here, or is it more kind of an optimistic view of things?
I think it's probably three things. I do have a little of that in me for sure, right? Not wanting to stab. I think all of us that are in crypto do. I'm inherently optimistic, and then I'm somewhat, I studied philosophy in school, so I'm somewhat of a first principles thinker. And when you strip something like crypto of all the emotional baggage, and you just look underneath at the technology, you're just like, well, this is better. And so it will ultimately win. So I think the combination of contrarian, optimist, and first principles thinker, if you draw that Venn diagram, I bet 100% of those people are in crypto right now because it's the only place to be.
Yeah, wasn't there that article or some sort of study that said that Bitcoiners lean towards psychopathy? Right?
A little bit. I mean, you have to have the strength to stand against what was a massive headwind, and a lot of smart people, and a lot of my heroes, right? My investing heroes telling me this is a terrible idea. Warren Buffett, Jack Bogle, right? There is a long list of people who were very skeptical, and you have to take those seriously. So you need maybe optimism and contrarianism equals, psychopathy. So I think there's an element of that you have to be willing to withstand.
Yeah, so now we're kind of in a different place, right? So it's been a massive year for institutional adoption. And I think back, to when I was in investment banking and we were talking about Bitcoin and looking at it, this is kind of 2016, 2017. And there was a lot of worry around regulatory clarity, around custodial options, and I think probably primarily reputational risk. Right? Nobody wanted to put I've got told directly, I'm not putting my name next to a Bitcoin fund. Right? So in 2025 now, what are the remaining institutional barriers? Are there any left?
Yeah, I think the biggest one is anchoring bias, to be honest. I think it's people evaluating Bitcoin through the lens of 2020 or the lens of 2025. And it takes a long time to overcome that anchoring bias. Of course, there's still some element of regulatory risk, maybe less so in the US, but in some other countries, there's still regulatory risk. There's still some element of reputational risk because it is a volatile asset. You could, for instance, as a portfolio manager, advocate for Bitcoin in a portfolio and then see it fall 30%. That's possible. But broadly speaking, I think we're on the other side of that. I think crypto and Bitcoin specifically has been significantly de-risked, and that explains why the institutional adoption is going forward so fast. I think it's almost cool as an institutional investor to be pro Bitcoin now, and that wasn't the case even a year or two ago.
Yeah, definitely. So the other side of that is corporate adoption, and I think you've talked about this quite a bit. Now, probably globally, I don't know, we've got dozens of publicly listed companies, Bitcoin Treasury companies. Maybe more globally. Where are we in that process, do you think?
I think it's still accelerating, which I know is shocking to many people because there have been so many. But I think we're going to see a large number of announcements in the remainder of Q3 and into Q4. And then I think it's going to be a trend that comes and goes over time. I think maybe the next phase, you're going to see these companies wanting to do things with their Bitcoin. I think you're going to see a lot of them adopt option overlay strategies to generate income or lending strategies to generate yield. I think you're going to see these sort of evolve into almost permanent capital vehicles, like a hedge fund that's permanent capital that's designed to generate these returns. As an investment, the premium to NAV will vary over time. And I agree with people that some will trade to a discount. But I think this is a trend that continues for a number of years as sort of permanent capital vehicles doing things with Bitcoin. I think that's going to be the dominant trend that we see continue.
What do you think is the other side of that? Like, what are the risks here? Because I think there's certainly a bit of this that feels like it's a little bit overheated.
Definitely, and I do worry.
There's a little bit like the Long Island blockchain kind of flavor to it. You remember that?
I do remember that. I think that's the case. I think there are two risks to watch out for. So one is that anytime something like this works in Wall Street, and you know this from your background, people want to do it 20% bigger and 20% riskier. And so we always ladder up the risk curve until someone falls over the edge. And you're going to see this. You're going to see people who don't raise a mix of equity and debt like MicroStrategy did, but just take on debt. You're going to see people who take on debt at very high interest rates. You're going to see people who take on debt and add leverage positions to their Bitcoin because they're trying to stand out above the big names, above the ProCaps, above the Jack Mallers, above MicroStrategy. And to do that, they have to stick their neck out really high. And that will create a risk, and there'll be blowups, no question. The other risk is more prosaic, which is just, some of these will probably trade to a discount. And what happens then? I think the perception in the market is that these companies will sell their Bitcoin and buy back shares. I think that process will take much longer than people think, because that's almost an unwinding of those companies' purpose. I think that'll have to be forced by activists. And I think it's more likely that they'll trade to discounts and people will worry. And then the natural volatility of Bitcoin will push them in and out of premiums and discounts over time. So I think that risk may be overblown. The one I'm mostly worried about is this tendency for Wall Street to just overdo a good thing until it breaks. And I suspect that'll happen.
So, I mean, so Kathy Wood, I guess in like 2018-ish, she had like a $500,000 target price on Bitcoin. And part of that was her thesis that, what if every public company in the US allocated 5% of their balance sheet to Bitcoin? And she was looking at it as like, a hedge against inflation and like a sound money kind of thing. But that's not what's going on here in a lot of cases, right? As you just described, it's kind of a marketing effort. So is that the evolution where we see people like bigger companies, like maybe Microsoft, conservative companies, where they can finally get on board with this? And maybe is this like direction that we're at a moment, a transitional thing, or is it disappointing, or what do you think?
I love that question because it's exactly right. There are two things that exist underneath this term of Bitcoin Treasury company. There's the MicroStrategy that just own Bitcoin and don't really have any other business. And that's the one where we'll see experimentation, where we'll see risk, et cetera. And then there's Block owning Bitcoin as part of their or Figma, which is going public, owns a significant chunk of the Bitwise Bitcoin ETF. It's not all of their treasury. It's just a piece of their treasury. Just like Bitcoin is not 100% of my assets. It's just a piece of my assets. And that's a trend that I think will just continue over time. I'm not the first to say, more and more people are concerned about the long-term outlook for the value of the dollar, and they want to hedge. That could be an individual or it could be a corporation. So I think that's a trend that continues for a long time. I think Kathy's right about that. And this is an important trend.
Yeah. So in the last cycle is, we got more institutionals kind of putting a foot in the door, and then we had a lot of blow-ups around, FTX and 3R Capitals and the lending platforms, BlockFi, Celsius. And I kind of got the feel that I thought in the last cycle, because we were getting more institutional investors, that we were getting more yin and yang. It wasn't just retail, and that we would kind of not have those big 80% pullbacks anymore that we had in the past. And obviously I was completely wrong. And part of that was like the institutional guys are not diamond hands. They're not people that will ride it into the rocks like, some of these psychopaths we discussed earlier. They don't have the pain tolerance. And like, to be fair, they've got, mandate restrictions and things like that. They can't just suffer through an 80% drop and do nothing. Right. So do you think that we could see a little bit of deja vu here again with more of these corporate companies, that once the tide goes out and we find out a bunch of people don't, they're not wearing pants, and what can happen in that situation, and we get a big dump?
Yeah, it's a great question. I mean, it's worth noting that I think the chances of a giant pullback are much reduced. I think a lot of the biggest pullbacks in crypto have been driven by the lack of clear regulation, right? Mt. Gox, because we didn't have real custodians, ICOs because they were fraudulent and dumb, FTX because we didn't have regulated venues that people could access. And I think the proactive SEC and things like the Genius and Clarity Act diminish that risk going forward. But could we have a drawdown, and could institutions sell? Absolutely. Institutions aren't a monolith. There's fast money and institutional money, and there is slow money, right? I think financial advisors are pretty slow money. I'll add a fun fact. Bitwise had inflows in 2018. We had inflows in 2022. I mean, net inflows. But we serve this financial advisor audience. So I think there's a mix. I do think the days of 70% pullbacks are in the past. I don't think the days of 40% pullbacks are in the past. I think that's entirely possible.
Yeah. Okay. And I do find it kind of interesting that like a lot of the big blowups of the last cycle, though, were in the regulated markets, right? So it was in Singapore, BlockFi, Celsius in the US, FTX arguably in the US. So, sometimes the regulation is maybe not as good at, kind of preventing those things. I think there's, I don't know what to say about it. I just think that's interesting kind of fact to point out, but certainly we're in a different kind of period now.
Yeah, I think that is right. I mean, those are the places with the most money is the flip side of that equation. So you're probably going to get the biggest blowups. And I think in the US, we were really, doing a hear no evil, speak no evil form of regulation where we just wouldn't touch anything, except for the good stuff, right? We sued Coinbase and left FTX unmolested. I don't know. But I do think, look, regulation doesn't cure all problems. The traditional markets are regulated. We still had Bernie Madoff and we still had 2008, right?
Yeah.
Like it doesn't protect us, but I do think it diminishes the likelihood of those blowups.
So with the passage of Clarity and Genius, what do you think that means for the industry in the US and then globally?
Yeah, I think it means diminished volatility because it reduces the risk. And it means dramatic increases in institutionalization because it removes that regulatory and reputational risk that kept people out of the market. So I think we're going to see really fast this integration of Wall Street and crypto. I think it's going to make some crypto people uncomfortable. I know it makes most of us a little uncomfortable, but I think it's going to happen really fast, right? We've already seen JP Morgan and Coinbase announced that you're going to be able to access Coinbase wallets within the JP Morgan banking app. I think as we get these regulatory agreements, you're just going to see these lines blur really fast. I think it's going to be good for growth. It's going to bring down volatility. Yeah, I think it's mostly positive. Is my broad take. I will say I think it has a chance of creating a haves and have-nots in the crypto market. Right, they're going to be projects that are in the good graces of regulators under the Clarity Act, and then projects that are not. And I think you can see different valuation and different growth trajectories for those two kinds of projects.
Yeah, that's interesting. And so on the blurring of the lines, I feel like that the digital asset industry has been probably much more influenced by TradFi than TradFi has been influenced by us. Do you agree with that? And do you think there's an opportunity to bring some of the core values, I think, of the digital asset industry, like self-sovereignty and sound money, these kind of things into Wall Street? Or do you think we're just destined to kind of be jammed into their mold?
I'm optimistic that we can influence them. I think you're right about the direction of travel. But if you think about something like stablecoins, right, it points to a significant fragility of the traditional banking system, which is the inherent mismatch of duration between bank deposits and the loans that banks make, which has manifested itself in hundreds of banks blowing up, on the regular. I think stablecoins solve that, right? Because customer deposits, they want stable dollars. It buys short-term treasuries, and that's it. That's an example of how the transparency of crypto points to a better financial future. I'm hopeful that we get more self-sovereignty. I'm hopeful that we get more efficiency. I'm hopeful that we get more people able to participate in the opportunities that finance provides, which are right now reserved for a special class. And I do think those walls will break down as DeFi makes its penetration into the space.
Yeah, that's a big part of our pitch with Bitfinex Securities and also with Tether is the inclusiveness. Tether really is dominant not in G7 but in kind of like emerging markets and frontier markets. And who would have thought that Tether would become like strategically important to the US, right? I saw on a podcast, the All In podcast, one of the people in the administration, I think that worked with David Sachs, and he said that Tether was, I think he said on track to be the fourth biggest buyer of treasuries. And I'm not sure on the time frame, but I mean, that's just a crazy statistic.
I think we should be building statues to Tether. I love the journey of Tether. Like I was thinking about this today from all the Tether FUD, the Texas, professors and all of that nonsense.
Yeah.
And
Bitfinex. Yeah.
Bitfinex, ridiculous. And just today, you had the ECB saying the rise of stablecoins could extend dollar hegemony and dollar's dominance in the world. You had a blog in the South China Post where China is worrying about stablecoins extending US dollar dominance. The Genius Act is not just a crypto act, it's like a geopolitical and macro act to support the American economy going forward. And we should be particularly hopeful and thankful for Tether, which is sort of the international stablecoin, right? USDC has a big role in the US, but Tether has brought in a huge amount of money into US treasuries from international buyers. And I think it's strategically important that it grows. It's a wonderful turnaround. It really is.
And it's really interesting from an intellectual perspective too, that when you have this free and open market, like you kind of do in crypto and with things like Tether, is that people want US dollars. They don't like Euro Tether never really like got its legs. Even tokenized gold never really caught up. And that's just kind of an interesting thing. And then everybody just wants US dollars.
That's right. Well, when you can have one of the things that crypto does, it makes, finance global and frictionless.
Yeah.
And so all of a sudden your choices aren't restricted. And when your choices aren't restricted, you want the best, right? If your choices are restricted, you go for what is easy and local. And I think it really points to that. People want the dollar. It's not a beautiful currency, but it may be the best that we have. And I do think, for what it's worth, another thing I was thinking about today is people have stable coins wrong. They sort of see them as a threat to Visa. Maybe. They're a threat to terrible currencies globally, right?
Yeah.
That's what they're a threat to. The first place they're going to disrupt is an emerging market currency that's having double-digit inflation. That is who they're targeting. Not today, Visa. It's those emerging market currencies. And I think that's a great thing. Like, gives people better financial services, better products, more stable currencies on which they can build their lives. It's a huge good for the world.
Yeah, you mentioned for the Clarity Act that there might be kind of two different tiers of assets, the ones that are included and the ones that aren't, and there might be trading at different prices. So I think people expect Bitcoin and Ethereum to be the ones that are treated as commodities and included in that. Is that kind of your view as well? Does everything else kind of get pushed out? And where does that leave the rest of the cajillion coins and tokens in the market?
Yeah, I mean, you have to assume that 90+% of the coins will be on the wrong side of that equation. And
I think they have to be, yeah.
And they should be, because they're not decentralized, right? The core of, is it a security or a commodity, is there a central party that controls it? If there is, it's a security. If there's not, it's a commodity. Bitcoin, Ethereum are clearly on the commodity side of the ledger. I don't know how it's going to turn out, actually. I actually suspect there'll be rules that are close enough that allow a small number of other assets to make it into that commodity bucket. They may have to adjust. They may have to do distributions. They may have to do sales. They may have to increase the free float. They may have to change their governance. But I think the rewards of doing so will be big enough that you will see probably a handful others make that leap. But the long tail of nonsense is going to be in the other bucket, as it should be. So I think it'll be good for crypto. I think it'll enhance decentralization and enhance the things that really matter in this space, if they do it right. But of course, that's a big if. That's a big if.
So where is the flexibility in it? Isn't it kind of clearly defined within the act, or is there?
Oh, for sure. But let's say, well, the act is not law yet, so it could be flexible. But let's say that
I see. I thought it was already passed. Okay.
So the Genius Act is passed. The Clarity Act is still between the House and the Senate. Still being.
Oh, I see. Okay.
Let's imagine that there's a rule around internal ownership or a rule around governance. It's entirely possible that a protocol could adapt to that rule. Like if you need to be more decentralized, there's no reason we have to classify something as centralized today and never allow it to change. If you think about the first day Ethereum existed, was it fully decentralized? Right? Maybe not. But it's evolved over time, and I think that's what I mean about like a system you could evolve over time.
Yeah, I think I would still be one of the ones that would argue that it's got a ways to go yet. And I think about there's a monetary incentive for some of these things. Like you think of just name names, Ripple, Cardano. Like there's insiders that hold massive amounts of this stuff, and they're incentivized for it to not be decentralized. And I think that's the critique that Bitcoiners have of it. Is it's just not fair, and it's kind of like a little bit of decentralization theater.
I agree with that sentiment, and I think that exists and is pervasive in the crypto market. Here's my optimism coming in versus your.
Let's hear it. I call it reality, but okay, let's hear it. What do you got?
So you called out one economic incentive of those insiders, but if there's a countervailing incentive to migrate to a more decentralized system, and even if they control a smaller share, that share could be more valuable.
Sure.
Then that can, that creates an interesting pull, right?
Yeah.
And which side do they want to be on? And if it's true that institutions only build on this, this commodity side of the ledger, to accidentally use the word, then there may be some that get pulled in that direction. I think that's entirely possible.
So how will that work? So presumably, will it be that like institutions will only be able to interact with assets that are captured under the Clarity Act? Will they be able to interact with this bucket of ne'er-do-wells and everything else that kind of falls into it?
I actually don't know. I'm not sure. I think that remains to be seen. Early in crypto, not that early, maybe 4 years ago, Hester Peirce had this idea of a sandbox, saying all crypto projects start as centralized projects, right? Because it's like one guy with an idea or a team, and that's inherently centralized, inherently a security. And maybe there's a sandbox that they can exist in and do experimentation, but then to move into like being a real decentralized blockchain, they need to make certain adjustments. And this idea that you could start here and end up there, I think is a valuable idea. And I do think Ethereum gives you an example of that, right? 30 people in Switzerland, obviously insider controlled. Today, that's not the case, right? And I think this, the optimist in me and the person who thinks innovation doesn't always end, wants there to be this graduation function.
I find that that's an interesting sentiment that I find is really prevalent with especially like people from the Valley, like tech entrepreneurs, is they just really struggle that Bitcoin could end up being the winner because they have this strong, this instinct that the first thing cannot be the winner. It's always some sort of tweak or kind of like, so I think that's there's so many interesting things about Bitcoin, but that's one of the ones is that it's counterintuitive to everything we've seen in technology for like the last 30 years.
Yeah, I think a lot of people get that wrong. Look, I think Bitcoin is the winner from a money perspective. I think it's crypto's money. I think the reason people get that wrong, obviously that's counterindicated to Silicon Valley's business model.
I guess,
that's a big piece. And then the other is they discount the importance of network effects. Like if network effects are dominant enough, then the first is the winner. And they're so important in something like Bitcoin, right? The security, the liquidity, the community, the global nature. And then the other thing is like sometimes you just get it right. I mean, the quality of Bitcoin's design is incredible, and the prescience of its design was incredible. There's an outlier for every example. So I think Bitcoin has got escape velocity. I don't think anything's going to challenge it. I just think there are other interesting things you can do in crypto on other blockchains like ETH.
Yeah. Okay. Well, that kind of is a good segue into security tokenization, which is my day job. So the Clarity and the Genius Acts, as much difficulty and trouble it was to get those passed, is probably a relatively easy lift versus, changing U.S. securities law. So how do you think that can play out for securities, for tokenization of securities, and how much more difficult will that be? Given that it naturally inherently means probably some not insignificant amount of disintermediation for these deeply dug in incumbents.
Yeah, absolutely. It is going to be challenging. I think the two mental models to keep in mind of how I actually think it will work is sort of the Uber Airbnb model, and then the need for 10x improvement. So to break that down, the Uber Airbnb model is you just innovate and create a service that is so good that people want to use it, and then the regulations come to you, right? Uber was not legal in a technical sense. Airbnb was maybe on the edges of regulation, but there was so much demand for it, right, that people came around to it eventually. You could even argue that what we're seeing in the Genius Act is regulation catching up with customer demand for stablecoins, right? And so I think you're going to see this experimentation on tokenization that is so good and so so helpful to people that people are going to insist, and that will overcome. And then the other place, I think, what you already see, innovations that are imperfect at first always win on the edges because they have to be 10x better, not 10% better. And the thing people get wrong about tokenization is they assume, like, my father will log into a Schwab account tomorrow and all his stocks will be tokenized. And that's not the way it's going to happen. It's going to happen that tokenization will serve different investors first. It will serve crypto investors who don't trust brokerages. It'll serve international investors who can't get access to US securities. And it'll build up in that system until it's so good that it co-opts the traditional system. And I think that's why I'm optimistic on tokenization. It's not straight through the middle. It's sort of like around, and then it swallows the market over time.
So how does move fast and break things work in like capital markets? Because I mean, if you're doing that, and can that happen within the US, or as you mentioned, like the edges, does that have to happen out of the US? Because I think if you push the edges of securities regulations in the US, you probably end up in a lot of trouble fairly quickly.
Yeah.
But I mean, so it's different than Uber in a way, isn't it?
It definitely is. I think if you think about the growth of Polymarket, or you think about the growth of DeFi derivatives exchanges, I think you can see how this happened, right? Polymarket happened internationally and then had a US media presence that exposed people to it. And now it's catching up to US entry. Synthetics and offshore derivatives, DeFi exchanges really didn't happen in the US because they're very explicit blocks on derivatives exchanges, unlike trading crypto assets, right? Trading a derivative is like verboten, not allowed in the US. And you saw those DeFi protocols serve international markets. And eventually I think that will come back around. So I agree with you. It'll probably happen. Maybe it'll happen internationally, and there'll be pilot projects in the US, or maybe there'll be exposure into the US. Robinhood doing it. Robinhood's a US name, but they have an international tokenized equity market for internet. Like, I think that's probably the pattern.
Yeah, that's interesting. When you think about it, I mean, that's what happened with stablecoins, right? Is that it happened offshore, overseas with Tether, and then then when the US saw the opportunity and the advantages of it, you kind of bring it into the fold.
That's exactly right. And this is why the skeptics are wrong, because the skeptics are viewing it through the lens I talked about first, which is my father will log into a Schwab account and be trading tokenized stocks tomorrow. And it's impossible to get there in your mind. And I think the stablecoin example is a good example. I think Polymarket's a good example. I think derivatives exchanges are a good example. You can't go, it's not the obvious path. It's a little bit circuitous, but in the end, the technology wins. If the technology is better, faster, cheaper, people will want it and they will end up getting it.
Yeah, I 100% agree. That's it. So this is something I've kind of struggled with, because my pitch before Trump came in power and brought in the strategic Bitcoin reserve and sort of ended choke point 2.0. My kind of thought was that there was an opportunity for small to mid-sized economies, the economies that kind of understood what Bitcoin is and what the digital assets are. And they got that a little bit better, and they understood how they could leverage this technology to maybe catch up or leapfrog their regional competitors. And then when we started seeing some movement around the Bitcoin strategic reserve and choke point 2.0 and Clarity and Genius, I thought, well, maybe this is an opportunity for the US, and just the big markets eat it up too. But I think that you can mesh those two ideas. I think is it probably starts abroad, it gets big in some of these kind of more front foot jurisdictions, maybe someplace like El Salvador, and then when it's proven to work, then it's brought into it's almost like the smaller economies are the sandbox.
100%, yeah, and that's the way it has to be, because again, that's where it's 10x better, and in the US maybe it's 2x better, and so it can handle the working through the challenges because it's still better for people. And we've seen that even in stable coins, right? In the early days, it was hard for stable coins to move money. There was more risk, etc. But it was still useful to people in many circumstances. And as that grew, now stablecoins, just own treasuries, and everyone accepts them for what they are. So I do think emerging and smaller markets are the sandbox, but it will come back to the US.
Yeah, and I do really agree with you that I think that's somewhat inevitable because of the technology and just the vastly better user experience. Like if you've been on a Bitcoin exchange and you're used to real-time settlement and 24/7 liquidity and trading and the ability to self-custody assets, you just naturally ask the question, like my trading and banking experience was in Taiwan, where I'm at, where we trade like 9 till 1:30. And we're T+2. You sell your TSMC on Friday, you don't get your cash until next week. And that's just such an obviously, much worse user experience.
It's so crazy. I try to wake people up to this. Like imagine if your email shut down at 4:00 and that was just it. You couldn't send an email until tomorrow. And if you sent one, it got there in a day or two. I mean, it's weird that we tolerate it. It's like an anachronism. There was a Bloomberg article, Bloomberg headline, when the US went from T+2 settlement to T+1 settlement, that said US stocks settle the fastest in 100 years. And that's just like, imagine that in any other context. Like completely absurd. Like cars move the fastest since 1925. I mean, it's a crazy thing. It's unbelievable that we stand for it. It's wild to me.
Yeah, it's the power of momentum, isn't it? It's just like the way this has always been done, and it's really difficult for people to grasp, these new ideas and to apply the technology to the new technologies, and it just takes time, I guess.
It takes time, or you have to show them. I do think there are people who have experienced trading in Bitcoin, or people who have experienced using something like Aave, and it's eye-opening, right? Until you've seen what the other side can be like, you don't know how bad you have it. I think a lot of the skeptics just haven't taken an hour to, make a loan on Aave and see the interest tick up second by second. It's a revelatory experience. And I wish that they would.
Yeah. All right. So to kind of, take a bit of a Bitcoin maximalist perspective on things. So I've noticed in some of my conversations when I'm talking to people who are kind of bullish on Bitcoin, but also like the flexibility of some of the other technologies and see these as things that could be applied to maybe tokenizing capital markets or improving the technology behind capital markets. What do you think is the value proposition of some of these other technologies if you can build tokenized products on top of Bitcoin, like layer twos, like Blockstream's Liquid, and have everything settle on Bitcoin, which I kind of feel is just a better experience because it's the only really neutral chain. And it has the best level of regulatory clarity. What is the benefit? What is the argument for the other technologies when you can do so much of this stuff with other layer twos?
Yeah. Well, the argument as an investor is I have less than 100% confidence that is the way the world will turn out, right? I have nearly 100% confidence that Bitcoin is crypto's money. And that is a massive addressable market. I'm a Bitcoin maxi from a money perspective. I am a Bitcoin flexitarian or something from this other perspective. I just consider it unknown because the argument you're making makes sense, but does it, can it be as flexible as you can be on a blockchain like Ethereum? Are you certain that the people who are building in the tokenization space will understand that versus going with the status quo, which is Ethereum, which has a lead?
Yeah.
It's actually not always the best technology that wins in these user-specific applications. You can think of Betamax and VHS, right back in the day, where Betamax was a better technology but failed because it didn't have the same marketing and distribution engine. And you look at BlackRock building on Ethereum and you're like, well, that could happen. So from an investor perspective, I think the answer there is uncertainty, which means that if you want exposure beyond money, if you just want the money aspect of crypto, just buy Bitcoin. I am a Bitcoin maxi from that perspective. But if you want the other things blockchains can do from an investor perspective, I think it makes some sense to diversify, just because there is more uncertainty in that statement than there is in the money statement, where I think the story has sailed.
Okay, maybe also similarly on that vein, we talked to Eric Balkunas and to Matt Siegel and also to James Seyffart about the ETFs and how they're kind of developing. And I think Eric's view was he thought that Bitcoin would cover would probably capture 80% of the value within the ETF space, and then there would be a 20% tail that would split between everything else. I think James and Matt probably disagree on that statement. They thought that the tail would be probably a lot bigger and capture a lot more value. How do you think the vertical of crypto ETFs will play out in terms of value capture?
Yeah, I think Bitcoin will be the biggest and index will be the second biggest, and then everything else will be a long tail. For the reason that I just stated, which is, look, Bitcoin is the biggest, it's the best risk-adjusted investment in crypto. It's the largest market, it's going after the largest TAM. Everyone's going to want it. Once you get beyond Bitcoin, I think the right response is like, I don't know. So just own the index. So I think the index will be a significant chunk. I'm not sure Bitcoin will be 80, it may be 60, and then index could be 30, and everything else would be 10. I do think index is particularly as institutions move into crypto, they're used to investing in indexes. And I think index will be the next biggest category if and when we get an index ETP. I am talking my book. We created the first crypto index fund.
Everybody always is.
Yeah, everybody always is. But I do think that's the case. If you look, some huge percentage of the ETF market is indexed. It is how most institutions approach the space. So I think Bitcoin will be the biggest majority of the market, then index, then ETH, and then a long tail where, it's arguable, do we even need those eventually, right? By the time we get smaller crypto asset ETPs, you can probably just buy them in your brokerage account direct. So I think that's a long tail indeed.
And do you think the ETFs themselves are kind of a transitionary product? Do you think eventually all of these kind of, there'll be more people buying Bitcoin directly and self-custodying it and doing that kind of, moving up that kind of,
100%. Yeah. Look, we have a long way to go there, but if you extend out far enough, you have to imagine that, I say this as an asset manager, traditional asset management dematerializes to an extent. Now, there are arguments to be made that a company like Bitwise can do better diligence on custodians or can generate better trading results because we trade with market makers in size. But over time, the direction of travel is going to be sort of a dematerialization, and people will just own assets directly. I think that's true. I just think it's measured in decades.
And the whole structure of the market is probably going to change quite a bit over the next couple of quarters, right? Like we've talked previously on the show about how much of the Bitcoin is custodied with Coinbase. And I think that was the summary of all of the responses I've been given to that is that was probably the easiest option at the time. And there'll probably be more diversification as more products come to the market. And also as the banks are, they're looking to follow up on this massive success of the Bitcoin ETFs, right? So everybody's trying to figure out how to make money on this. And I guess custody is a natural fit. So there'll be more products.
That's right. And user experience, right? I'm not going to break any news by saying crypto has been bad at user experience for most of its lifetime. It's just true, but it's improving dramatically. So I think you'll see more ways of owning it. I think you'll see more direct ways of owning Bitcoin. I think the ETFs will still be hugely popular. They're still a very efficient tool, and they fit into TradFi reporting. And there's a lot of legacy that it will take many years to overcome. Eventually, we'll move in that direction, and what will matter is IP. Bitcoin has its own IP. An index may have its own IP. That will still have value, but we're going to get more and better ways to own this, and the costs will continue to come down.
Yeah. All right, wrapping things up, 2 more questions. I think you've answered this question already, but I was going to ask you, how painful do you think the end of this cycle is going to be? But I think you've indicated no more 80%.
Yeah. I mean, look, I think for what it's worth, I think the forces that drove historical 4-year cycles are attenuated significantly. So I think the impact of the halving is smaller. I think the interest rate cycle is moving in Bitcoin's direction. I think blowups are less likely and smaller. So I don't think we'll have the same 4-year cycle that we've had in the past. But we haven't repealed volatility, right? And I expect significant drawdowns. Yeah, I think they'll be smaller. I think 70% drawdowns are a thing of the past. And if it pulls back significantly, I'll be buying.
I love it. And so what about the other side of that? If the 4-year cycles, they start to kind of diminish, do you think we'll have less of the upside on the other side of that? Because I think that, one of the interesting things about the way that the halving cycle was designed is it also kind of lines up with this US credit cycle as well, where things need to be refinanced and rates need to be cut. So even if the block rewards decrease over time, you still have that tendency within the structure of the U.S. economy, right, to drive Bitcoin every 4 years.
Yeah, I just think it's not programmatically 4 years. I raised that because I think there are a lot of people who assume 2026 will be a down year, and I think that's probably not a good assumption. I think there are other forces that make me think 2026 will be a good year. But most importantly, it's just not programmatically a bad year, right? I think that's the point that I'm making. I think there's still a huge amount of upside. That's the really amazing thing about Bitcoin specifically, is we've removed all these risks, and it's still the case that most institutions don't have Bitcoin. So there's still a significant amount of upside. The other thing I would point out to people is many people look at the 4-year cycle in Bitcoin as what you described, which is this natural capital market cycle that resets and then we rebuild from there.
Yeah.
Another way to look at it is it was driven at least in part by unnecessary foot faults by the crypto community, by Mt. Gox, by ICO, by FTX. And that argument would be said that if you follow that logic, what it means is the price of Bitcoin should be higher than it is today. Right? We didn't actually need those setbacks. If we had managed the industry better, if regulators had been more proactive, if we hadn't had certain bad actors, we might be talking about $250,000 Bitcoin today. And I raise that because I think we're entering an era where those foot faults are less likely. And that means I'm very optimistic on the upside. And I think we've removed a lot of the left-hand tail risk. I sort of think it's like there's never been a better risk-adjusted moment to buy Bitcoin than today, because we removed some of that risk and we still have most of that upside. Again, there's still a lot of risk, still very volatile. I could be wrong, but I'm really optimistic over the next few years.
Yeah, I think you're right, but I also feel like you might be jinxing us.
I'll take it all back.
So last question, and speaking about, programmatically picking target prices, Grok told me that Bitcoin will hit $400,000 in the first week of November of this year. Is your target price still 200,000? Are you comfortable with that? Do you want to readjust given Grok's input?
Look, I hope Grok is right. It may know. We still think it's going to 200,000. We think there's this structural mismatch between demand and supply. There's more demand from companies and ETFs than there is new supply. Econ 101 tells you price go up. We think it goes to 200K. I hope Grok is right, man. That would be great. So
your view is 200 this year, and then does that stretch in? It sounds like it stretches into next year as well.
Yeah, I think next year will be a good year as well. I don't have a specific price target. We'll put that out at the end of this year. We'll have to see how this year unfolds. But we think the limiting factor in Bitcoin's price right now is behaviorally driven sellers by old OGs in Bitcoin. So people who bought Bitcoin many years ago who are willing to sell it at certain prices. That's why we have a round number target. It's not incidental. We don't think there's a lot of people who want to sell at 120K. I don't think we're going to tread water here for a long time, even though seasonally this is a bad period for Bitcoin. I think we're going to move up toward the next sort of behavioral target, which is 200K. And then, I'm optimistic for 2026. Again, we'll put out our price target in December. We'll see how we do this year.
Well, that's great, Matt. I really appreciate your time. And maybe we can have you back on around December and you can reveal your new price target.
Let's do it. That'd be fun.
Hopefully we're at 400 and you're lifting it to like 8.
There you go. Rock slips.
That's right. All right. Thanks, Matt. Really appreciate it.
Thanks for having me.